Hey everyone, good morning and welcome back to another video on investing in the stock market, having another cup of coffee. And today I wanted to talk about something I've been thinking about a lot lately, which is taking risks. Now, when you're investing, whether it's stocks, real estate, cryptocurrencies, anything, you're getting paid to take risks. Now, my cat also really wants to be in this video. I mean, she really helps with the whole presentation. Just don't knock over the mic. So you get paid for where was I? So risk is the reason why you can make money when you invest. That's what you're being paid for. You're putting money on the line. You know, you can lose some, and because you're taking that risks for businesses, you're giving away your money. You can get a return, and the more risk you take, the greater the potential return. And of course, when you're talking about stocks, you're mainly talking about index funds on one end, and then you have picking your own stocks on the other hand. Then you have large cap, small cap, US, international, different industries have different risks. Growth stocks are maybe a bit more riskier than industrials or utilities and so on. And so you can basically take any risk you want. I pick my own stocks, and there are many reasons for this. I want to pick where my money is invested. I want to pick the best companies. I don't want to give my money out to thousands of random businesses. And I believe that in the stock market, the risk reward is skewed in your favor. Now, of course, the stock market usually goes up. It goes up about 10% every year, right? Which is great, especially in the US stock market. And some companies do a lot better, some do worse. But what are you really risking? If you invest in a risky business, for the last 10 years, it would be like Netflix, Nvidia, Tesla, Amazon, these growth stories where they were flying really high, a lot of ups and downs, high volatility, big risks. But when I invested in Amazon back in 2013, what risks did I really run? So if it didn't work out, the company slowed down and, the growth didn't really keep up with expectations, and the stock would maybe take a little bit of a dip, 20%, 25% maybe, and then from there just become another stock that just slowly goes up. That's, in my opinion, that's the risk you're running with big companies. Maybe you lose 20, 30%. If there's some cataclysmic event, maybe you lose 50%, and then it's going to slowly go back up. But the potential reward, now I couldn't possibly know this, right? But Amazon is just one example of many where I made 500%. And so you can never lose 500%. So the risk reward is always skewed in your favor. If a stock doesn't work out, it might, only make you 2-3% every year, or you might lose a little bit over a couple of years, but the potential return is so much greater than the potential losses. So that's why investing is a good idea no matter what, especially in stocks. And when you pick your own stocks, which I think you should do, you also get some big winners and some big losers. But the winners are always way bigger than the losers. So if I pick 10 companies and I have 2 brilliant stocks, 2 really bad ones, and then 6 in the middle, the bad ones will maybe lose me, let's say 10-15% over a couple of years, which is terrible. If a stock goes down 10% over 3 years, that's actually terrible. It's way worse than it sounds. But the great ones can go up 200-300% maybe in 2 or 3 years, like really good growth stocks. So already there, you're going to win no matter what. So you only need that one home run to make up for 5, 6 bad ones. And the companies that have done really well for me, they've already made 3, 4, 500% return. So they have already made me more money than any of my safe picks will ever do, right? Like, so I own JP Morgan, for example. How long do you think it will take for JP Morgan to make me 500%? I will not live to see JP Morgan give me that return. And Amazon did it in 4 years. So already there, I'm done. I don't have to do anything else. And you also learn from your mistakes. So when you're picking stocks, you're actually learning, and you can take lessons. If you just put your money all in an index fund, it goes up 8% every year. You have no idea why. You have no idea if you could do better. You're just giving in to the investment industry and say, here's my money, take a little bit of a paycheck and please make me some money. You know, for most people, it's the best option, but I think, especially you guys watching this video, you can do better than an index fund. So let's say you go to the S&P 500 and you pick the top tech stock. At any point, it can be Apple, Microsoft, Google, or Amazon, okay? 4 great companies. I bet you that if you just picked those 4, or just one of them, there's at least a 65% chance you will beat the Dow Jones, for example. You will beat the average, right? They're safe, they're still growing, and they're really powerful. What more do you want, you know? I mean, why don't you just pick the quality companies over all the other random companies? And a lot of you watching this video are young men. You're actually all men, by the way. From the age of 20 to 35. You're from the US, Canada, UK, Germany, and Australia. Hello. I'm from Norway. And you guys have, we have a lot of time ahead of us. We're young, so we have time to fail. We have time to learn. We have the freedom to take risks that a 70-year-old don't have. So for us, it's not about conserving capital. It's not about protecting all the wealth we've built up. It's about taking risks. And no big thing, no great achievement has ever been done without taking risks. So I say go big or go home. Like, you can put away 10% of your paycheck, put it in an index fund forever, and yeah, you might get a comfortable retirement. You can put aside a little bit for your children, but I think you can do better. I think so. I think I can do better, and I have beaten the market since I started. 2018, I lost to the market. The other years, I beat it. So go big or go home. So any great thing comes from taking risks. And I will also say my biggest risks in the stock market specifically has been Amazon, Activision Blizzard, Nvidia, and maybe like Square Payments or something. They're all pretty much my top performing stocks. One has done really terribly lately, but Activision Blizzard I bought at $19, and at one point it was up at 80. So my biggest risks have been my biggest winners. So if I learn anything from that, is that taking risk pays off. So what I would suggest is that if you're someone who just puts your money in very safe index funds or ETFs, let 2019 be the year when you pick a stock. Go to the S&P 500 and pick the best company. Just the company that you think will do the best. Don't think about safety, don't think about dividend, don't think about, risk. Just go for the company you think is the best, and let's see what happens. I bet you it's going to outperform the market. So that's it for me, talking a little bit about risk. I'll cover this topic more specifically with some numbers later, but this was just a rant, another rant. I love doing this video, and yeah, spread the message. You know, passive investing and index funds, you know, it's an investment industry, and the industry wants you to put your money in their fund so they can make money. It's very safe, but you know, you're a bit of a slave. You know, it's a bit of like having a 9-to-5 job. Now, I do have a 9-to-5 job, but ideally you want to be your own man. You want to be your own boss. You want to take control of your life and make your own decisions and see what you can do. Because if you don't, how are you going to realize your potential? So that's it from me. See you guys next weekend. I'm going to try and do one video every weekend. Please let me know if there's anything you want me to do a video on, and I will do it. Drop me a comment, subscribe, and I'll see you.